the big story we're tracking for you, the Federal Reserve making its highly anticipated interest rate announcement. Well, let's see, less than an hour from now. In the room for the first time, the newest Fed governor, Stephen Moran. CBS News MoneyWatch correspondent Kelly O'Grady is at the New York Stock Exchange this morning, watching this very closely. Kelly, good morning. Great to see you. Update us on what to expect today. I know as you and I spoke yesterday, the expectation is that there will be a 0.25% cut, but what data is driving today's decision?
That's right. So we have 100% probability that we are going to get some kind of interest rate cut. And you are exactly right. We are expecting a 1/4 point rather than the bigger jumbo half point. The data that all of these economists in the room are talking about focuses on pricing data, inflation. So remember, we got the consumer price index last week, as well as a number of other inflation reads. And they're also looking at the job market. Now, remember, the inflation rate stands at 2.9% at that last consumer price index reading, which is not where the Fed wants it to be. Remember, they want that inflation rate at 2%, but it's not that runaway inflation that economists predicted with the impact of tariffs. And they're weighing that against what is happening in the labor market. And we have had anemic job growth at best for the past few months. So those are the two tangible pieces. They're also going to be considering things like consumer spending as well as consumer sentiment. And then, of course, these higher tariff rates that went into effect for countries, even after those deals were made towards the beginning of August, and sort of predicting when are they going to see that trickle through the prices. All of these pieces of data will go into that decision that we will hear ultimately at 2 p.m. today.
Yeah, and one fascinating piece of how our viewers are living their lives, Kelly, is that it truly does matter what your income is and where you are in the economy based on how you view rate increases or cuts. So, for example, we saw retail sales increase last month, but that was really only among the more wealthy Americans. Can you paint the economic picture for us for people who are roughly in the middle, average families? How might they be seeing these numbers?
I think that's a really important point that you just spelled out, Errol, that there is really a two-speed economy going on. And we have heard that on earnings call after earnings call, especially I'm thinking about some comments from the McDonald's CEO that they were really seeing lower traffic from that lower income consumer. And that's what's happening. You have these overall numbers in the labor market or consumer spending, but really it's being driven by that higher income consumer. So when you think about the middle income consumer, you have people who are looking to get their first home, that is out of reach. And even though we have seen mortgage rates come down, they're still dealing with inflation that has outpaced income growth when you go back 5 years, thinking about the beginning of the pandemic. So we talk to small businesses, we talk to middle income, lower income families all the time, and they're just feeling behind. So yes, an interest rate cut would provide some relief, but if you think about if you're in credit card debt, a 1/4 point, it's not really going to move the needle for folks that are struggling under significant debt.
Yeah, no, really important things to keep in mind, the lives behind all the data and the numbers. Kelly O'Grady, great to get this update from you. Thanks very much.